Of course, the big economic news out this morning was jobs report. Experts were totally wrong. We produced 69,000 new jobs. They were calling for 150 to 170,000 new jobs for May, and that certainly didn't happen. But more distressingly, April and March numbers were reduced sharply as well. So the economy is not producing very many new jobs, not nearly enough to drop the unemployment rate. Matter of fact, it went up to 8.2% from 8.1%, and even that's incorrect because 200,000 to 300,000 people dropped off the unemployment rolls because they lost their benefits, unemployment benefits. So that number's wrong. We know it's wrong. Everybody knows it's wrong. We had weaker economic news coming out on a variety of areas. Pending home sales was down. Consumer sentiment was down, which I'm not too big on consumer sentiment. Claims for new unemployment benefits was up 10,000 this year to about 380,000, somewhere in that range. So those are not good economic news. A little bit of brighter spot was the ISM report out this morning, U.S. ISM report in manufacturing. We'll get the service sector probably Monday, but on manufacturing, came in at 53.5. Now that was a little lower than they expected at 54, and a little lower than it was last month at 54.8. But last month was the highest it's been since last summer. Anything above 50 means growth, and we're at 53.5. But more importantly, the new orders component of that report was up from last month to 60.1 from 58.2. So that bodes well. I mean, not fantastic, but good enough to give us comfort that we're really probably not falling into recession. But we're certainly catching a little bit of cold from the European problem and from China and India slowing their economies. This morning, China reported their PMI weaker than expected at 50.4. But the HSBC report on China's PMI, because that's different, that's a private company looking at China from the outside, said it's probably 48.7. So they're a little bit more conservative, whereas China's a little bit more optimistic. And you would think that that would be a bad thing, that these numbers, these slowdowns would be a bad thing. Actually, I don't see it that way. What I see is around the world, governments know they have to do something, including ours, which means QE3 is back on the table when it wasn't. It's back on the table. QE3 means something will be done to spur growth, and that from the Fed, from the Federal Reserve. Right now they're finishing off Operation Twist, which ends in this month of June, because it's June 1st now. It ends this month, and that means more stimulus coming from the Fed. I don't know what form it will take. I have some suspicions, but whatever form it takes, it will be viewed from a stock market point of view as something good. And you know Europe is going to come out with something within the next few weeks to try to spur their growth. Some kind of agreement's going to happen there. So I'm not really too disappointed. We've kept a pretty strong hedge in against loss. For instance, June's stock market went down 6%. All our accounts are down 1.5%, somewhere in that range. I think that's pretty good. And I've heard the Dow as of today is flat for the year. We're not, we're up. So our conservative stance that we took early, probably a little too early, is now paying off big time. So I'm at least pleased with that.
The Invest Talk Update is a monthly briefing that gives you a snapshot of the past month's market, along with other useful perspective and information. You'll see important articles like Protecting Your Investments Against Scam Artists, excerpts from Steve's book, links to the month's Invest Talk talking points, plus news of upcoming Invest Talk events in your area. And it comes free each month to your email box. To get your subscription, just go to investtalk.com and click on the icon at the top of the page.